So let's now start with this panel. So here you see the 7 finalists and the 7 panelists that are with us today. I'm going to stop my share, and Niels, if you could take it over here and lead this panel.
Well, and so the focus of the panel is, again, how to leverage digital to better serve customers in financial services. And obviously there's a variety of customers, and there's a variety of ways. So we're going to cover multiple themes within this broader topic. Before we do that, I want to just give each panelist the option to quickly introduce yourself, and I'll do that in alphabetical order. So first, Martin from London, welcome.
Hi Niels, thank you, and good afternoon everybody. So I'm Martin Bellamy. I'm the CIO of the UK Financial Conduct Authority, which is the UK's financial regulator. Very pleased to be here.
Fantastic. And Manuel, you're coming from Portugal. Where in Portugal?
From Porto. Good afternoon, everybody. So I'm the CEO of Euronext Technologies, so a company that is part of the Euronext group, which is a stock exchange that operates in Europe.
Thank you. And Saverio from Italy.
Hello to everybody. Saverio Ferraro. I'm the CIO of BNP Paribas Group since 2018. I come from telco sector.
Fantastic. Thank you. And Sofía, you and I are relative neighbors. I assume you're also from Madrid?
Yeah, I live in Madrid. Thank you so much for this opportunity. Hello to everybody. I'm responsible for the transformation factory that BBVA Spain has to push digitization and transformation of the business model.
Thank you. And Anke from Germany.
Hello, my name is Anke. I work now for more than 30 years for banks, 15 years in the business side, 15 years in the IT side. So I put this all together. And I'm CEO of the DWP Bank. It's a bank in the securities industry.
Great. Welcome. Eelko,
yes,
please.
Thank you. Nice to be here. Welcome, everybody. My name is Eelko van Leeuwen. I'm the CEO of ABN AMRO Clearing Bank, and we are one of the largest clearing and settlement companies in the world.
Based in Amsterdam, right?
Based in Amsterdam, yes.
Cool, cool. And then from Belgium, Geert.
Hello, everybody. Geert van Mol from Belgium. I'm Chief Digital Officer, member of the board of Belfius Bank and Insurance. It's the second biggest bank and insurance company of Belgium, doing public, corporate, business, private, wealth banking, retail banking, insurance, any of that stuff. So that's me. I'm heading digital, but also data and beyond banking.
Great. Thank you. Thank you all. And so the first subtopic that we want to cover is around the customer experience. And clearly, all of you have a long history of dealing with continuously improving the customer experience. And those joining us, the participants of this event, like myself, right, we all belong to at least one bank. And so we've all had to deal with customer experience with financial services. And so actually, before asking the finalists about that, we've got this poll that we'd appreciate participants to vote on and tell us about, you know, how during the lockdown has your bank's customer experience been in terms of, you know, is it better than before? Do you consider it's about the same as before? Or is it much worse than before the pandemic?
Yeah, we all a client at the bank. So just out of your personal experience, how did the banks do basically during this lockdown? I mean, it was a challenge. So did they go the extra mile, and did they did they do better than before? Was it the same or what or worse? The poll is running, and only the people in Zoom can participate. So we'll give the results of this poll in just a moment. I'm going to end it now and tell you what the results are. So I'm sharing the results now. And we see that 77% of the people that voted say it was just the same as before. We had 14% who said, no, they didn't do well during this crisis. And we had 9% who said, well, these banks did go the extra mile and they did better than before. So that's the to set the scene a little bit.
Yeah.
The voting.
Well, and actually, Saverio, in Italy, right? You were the first country to go into lockdown. Tell us how your organization handled this situation.
Yes, so unluckily, as you said, we entered 1 month before the others in the crisis, and what we in a way experimented, because obviously there were no reference models, literature, there were no practices aside, was doing and focusing clearly 2-3 areas in which we were expecting being able to provide services, better service towards the customer. Before saying that, I think it's important to set a bit where we stand before crisis, because obviously the starting point makes to come to an answer makes the difference. In Italy, in our retail banks sector, BNL has most likely 2 million customers, and one of which is digitalized. So we have a penetration of 50%. So the point that we faced first during the crisis was how to serve non-digital customers, because lockdown prevented people to roam around the country, to visit branches, to serve and to use physical services. So the 2 levers that we rapidly understood was needed were on one side the ability to push further and to enhance the utilization of the current digital channels. So one of the actions were try to do as much as possible to stimulate customers to move towards the digital channels by pushing them towards, by stimulating through communication activities, by enhancing digital channels in order to complement them. The second was provide to the physical network, it was said, but obviously it was not accessible, digital communication capabilities to contact the customer that were aside the digital channels in order to engage them. So what we did was basically push in the first 2-3 weeks, moving this 50% of penetration of digital channel to 70%, reducing this kind of gap. And in that sense, we were capable to serve the customer.
That's amazing. And Sofía, in your case at BBVA, you know, in addition to trying to get more customers onto digital channels, part of the challenge that you've tackled is once you've got these customers, how to help them with a broader set of needs, such as their financial well-being. Can you help us understand what it takes to help address these broader needs of customers?
Yes, I think it's important to have the background of where we were coming from. I think we had a clear vision 10 years ago, and we were pioneering this relationship with our customers. We had the vision that we had to digitize them, to bring, to make the mobile the command of the relationship of the customer with the bank. But at the same time, we had to keep the strength of our managers, because that relationship, we had to keep it. So we also brought into our app this ability to connect directly with your manager, to pre-appoint with the manager, or to write the manager in a private space. So in the first period, we really put a lot of focus in delivering a lot of functionality. Right now, today, we have an app that has more than 800 solutions or functionalities that can be used by our customers. So it's nearly 100% of what the customer can do in the app. Then once we have covered this, one of our strategic priorities is really to help our customers improve their financial well-being. And for that, we also leverage a lot in data, in the data that our customers are providing that. And what have we done there? 2 different things. We have developed tools, but we're also working a lot in insights, and how can we be more proactive and more personalized in the insights that we are giving them. So for example, we have developed tools like day-to-day tools that allow them to see their expenses organized in an easy way to grasp, categorize with easy. We forecast for them how their account will end at the end of, we'll finalize it at the end of the month, even if it's the beginning of the month, so that they can have an idea of what will happen. We are able, we offer them the possibility to calculate their financial wealth score so that they can improve them. And we also, as I was saying, offer them insights, very proactive and very personalized. So for example, kind of things, or this month you just received a bill payment that is like 30% above what your regular issuer is sending you. Do you want to check this bill? Maybe there's a problem, or or maybe we can also tell you, anticipate you that you might end up the month in an overdraft. Do you want to do something before this happens? So there are lots of insights to help them have this control and improve this financial well-being. We also have developed other tools like BBVA Valora in specific moments of the life of the customer, of the financial life, in which he has to take very, very important decisions like buying a home, which can really condition you a lot. So we developed this service within our app that allows you to calculate the right price to pay for the home you're looking at. So it has enormous data that allows you to have a better power of negotiation and to really evaluate whether it's good or it's convenient for you to buy the house, or it's better to rent, or whatever. No, I just want to add. So this working on this financial well-being for the customer critical is supported in data because we've done the digitization effort before, and just as you were referring to, also we've been also very satisfactory. So during this crisis, this has proven to be very, very important for our customers. I mean, they have been able to relate with us in a very smooth way. Our managers, our remote managers, have been critical because our customers could also contact them through the app, could start a conversation, could talk with them in the phone. So I think this combination of technology and people have been critical for us.
And this ability to really balance building capabilities for addressing customer needs by also building capabilities for employees, so that they basically are two sides of the same coin, right? To develop great customer experience, you need to also develop great employee experience, and developing those capabilities simultaneously is part of this multi-dexterity that so many companies struggle with. So thank you. That's super interesting. Geert, I want to ask you from the point of view of Belfius, how have you guys been dealing with this challenge of moving folks, and because a lot are already on the digital channels, and so how do you take it to the next level?
Yeah, we had the luck that we were already leading in digital. So we had the most functionalities already with a great brand experience, with a great simplicity in the apps. So that helps, because now not having one thing was really, from a customer point of view, annoying. So that helps. Secondly, we already invested a lot in communication to the app. So you can do video with your banker. So in fact, we never closed down the branches. And for me, the best proof, I mean, we're now closing our first semester of this year. You will not believe it, but we did in any business more than the last semester, than the same semester last year, during the biggest crisis of this world. And that's why the branches never closed down. They did video calls, and they could sign any document to customers' app. And what we even improved, we already had every day our customers, 1.5 million customers, they come every day. So our customers, or it's even more, it's 37 times a month. So it's more than a day. And what we even increased it. Why? There was also a stock exchange crisis. So we used small videos, 5, 10 seconds, 30 seconds, 20 minutes. The CEO, how are we looking at the stock market? How is Belfius doing to inspire the customer? So all the investments we did already in video, but also in not just a digital channel, but making it a communication channel of your brand during these extreme times, that was extremely valuable right now. And then just add one thing, it's not by accident that I'm sitting behind great records. As a digital leader, I'm always inspiring a lot of the people by the music, because it's not about technology, it's transformation. It's about emotion. And that's why I like to refer and find the parallel with music. It's not just about guitar, the drums, the technology, the instrument. It's about what experience can you bring? What interaction can you bring? It's like, okay, our kids, TikTok, they got an experience. They have a new experience. It's not just about technology. It's an app. Is it great technology, TikTok? I'm sure. It's a great experience. Facebook too. And this is what people want from their bank. And that's why the leadership, muscles, the capabilities we already built with our teams, communication, brand, marketing, and now we could also leverage that during these strange times. From a communication point of view, always with the good feeling, what music, what emotion do we bring to the app? Because simplicity, that is a basic. If you don't bring simple solutions to your distance sellers from your customer, you're out of business. But the next level is for us, the emotion. What is the emotional design? What is the feeling? And that's hard as a bank, bringing to we succeed.
And by the way,
a great point.
If I can interrupt, we have a special announcement. Geert has promised a bottle of champagne to the first person that can guess the 9 albums that are in the back there. I mean, the REM album is clear and easy, but if you get all 9 correct, the first one to win and put it in the chat or wherever, it will timestamp it. He will get a nice bottle of champagne from Geert.
Big one. That's
a big one.
But please do that while listening to the rest of the finalists, because you know, as I want to move actually on to the second topic within this broader topic, and that's around customer-focused operations, right? It's one thing to invest in capabilities that enhances the customer experience, and if you're B2C, you're probably measuring that through Net Promoter Score or some equivalent like that. And an essential aspect of that is also enhancing the employee experience. And we've heard that from BBVA and also at Belfius, the emotional aspects of addressing both experiences. There's also, though, we need to worry about cost to serve, right? And we need to worry about flexibility and operations. Saverio, I wanted to get back to you about, you know, this massive transformation in the IT organization driven by this aspect.
If you look at the journey that BNL make in the last 2-3 years, I think you can find 3-4 ingredients. For sure, we started with the objective to transform the way of working and the mindset. So Agile and DevOps were the most relevant topics, but not only in terms of internal culture or internal way of being and acting, but in terms of customer involvement. And this was a big shift, because we started to frame in our 2020 transformation all the digital ecosystem evolution, starting from a direct customer involvement in all the sectors. And then this led us to accelerate one side the maturity of those elements, on the other side the adoption of those elements itself. The second ingredient was a disciplined journey to digitalize fully the processes that were on one side interacting with the customers, and then interacting with, and managing internal relationship. In 2 seasons, actually, we started from customer-related processes, customer-relevant one, the onboarding, for instance. Then we realized that without giving the same tools and transforming the way for the internal people to serve the customers, we were having a sort of a disconnection, not only technologically, but even in terms of culture and language. That aspect led us to distill digital capability to reframe completely the architecture, having seeds, having elements that actually during this crisis we used to transform our service model in order to adapt to the contingency situation. The last factor was what I call intelligent automation extension, meaning we took the operation, we frame operation in order to adhere towards banking operation excellence frameworks. We were taking manufacturing standards, applying into banking world-class experiences. And then we introduce a full automation with, on one side, the intent obviously to improve our serviceability, to reduce the cost to serve, but from another standpoint, to be transparent with the customers, because that capability was used to provide feedback in the various stages of all the core banking processes to our customers. And that, in my view, in a way, help us to support this kind of shift. So engagement of the customer since the definition of all the services and the capabilities, rapidity and the reliability into transforming and adapting our landscape and our context to finally come to to the transparency. All those are elements that makes the difference. And coming back to your concept, makes future ready your company.
Anke, your thoughts on this, especially you know, given the now even more rapidly changing customer needs. What some essential capabilities? How do you see banks reacting well or not to this?
I just see them not well reacting, so, but I think we have a chance to do it in the future. Let me start with a metaphor from Tom Goodwin, Digital Darwinism. It's a wonderful book. I really love it. And for him or for me, the banking industry is like an old skyscraper. And what I see in Germany, I don't know if I see it in Europe, but I see in Germany is we put new carpets in this old skyscraper, new paintings. Based on this metaphor, we build new apps, but we don't work on the core business, on the basics. So what we don't do in Germany is to really build a state-of-the-art skyscraper. And we have to build new apps, absolutely, that's for the customers, but that's not enough. We really should start additionally in parallel to design the processes in industrialized way, modernized and standardized. And we have to speed up. We have to speed up a lot to do this. Let me take another metaphor, like Lego. We have to sort the pieces and we have to sort the processes and we have to build the microservices based on the future customer needs, today and tomorrow, not on the past customer needs. That's a much more dramatic change than only digitization. And that's for me is digital transformation. It's not only that we put analog processes in digital run. And I really think we should have started 10 years ago, like every other industry. I think we can do that. Some people know how to do that. Which processes, which microservices can serve the best our business model. And starting on the business model, we will have different business models, premium and standard and specialized and generalized, based on your business model. And that's the first they have to decide, what's my business model? Build your operating model, build your processes, build your modules, put them together, and then you're really fast. But you have to, I would say, invest 3 to 5 years to have these basic processes. In the meanwhile, build apps, absolutely. You have to, otherwise you're out of the business, but also build these basic processes in microservice and for the customer needs.
And thank you. And Martin, I mean, you're part of a distinct organization that I would assume that even in the case of your organization, you're also tackling these issues, these very same issues, even though your customers are quite specific.
We absolutely are, Niels. And of course, ultimately, the customers are the citizens of the country, businesses, investors. The regulator is there to ensure the markets work well and consumers are protected. But to do that, we collect an enormous amount of data from the industry and the markets. And so to a large extent, they are our customers as well. And people have expectations on us. And the industry rightly has expectations that will provide efficient and effective means of the industry providing data to us that incurs the minimum possible burden on the industry. In fact, just develop that point a little bit further. We really collect two main types of data. Data on the markets, where we are collecting tens of millions of data items per day that we analyze to look for patterns of market abuse. And no surprise that during the crisis, the volume of data has tended to go up as the markets become more volatile. For other services, we collect data from 52,000 individual firms that employ more than 1 million people. Data has always been the heart of regulation, but now that trend is increasing. We're using more and more data. And as the industry innovates and new products come, we have to keep on track of all of those. And our approach for doing so relies heavily on the cloud. So we've already moved our markets data collection capability fully into the cloud. And we're currently in the process of doing that for the industry data collection platform as well. We'll begin that by replicating the traditional capability that we have for regulated data collection, which is fairly predictable, regular time intervals, predictable fields. But we expect for the future it needs to become more dynamic. There'll be experimentation with different models, pool models perhaps, perhaps even models where some of the calculations are done within the financial firm's computer systems on behalf of the regulator. So big investment going underway, and by the middle of next year, we'll have everything in the cloud, which of course, if you kind of think about what the cloud offers, gives us the capacity, the agility, the flexibility, together with agile and DevOps approaches, the ability to be much more responsive, using the capacity we need when we need it, and able to offer a modern digital experience to the industry, which is really important to us because we need to keep the burden on the industry to the lowest possible level. Ultimately, there is a cost to that, and ultimately we all end up paying that cost. So it's in everybody's interest. It's as low as possible.
We've got a question from the audience coming in, and I would like maybe to address that to Anke. Anke, there's the question here is what's the influence in general of all these new fintechs that are arising, and is this creating a sense of urgency at the banks, or how is that working?
I would say not at all. I just read 2 studies from PwC and EY, and they were as concerned as I am that they don't think that they disrupt the industry, that they are competitors. They think that the competitors are all the other banks. So should be, but I can't see it. So I think it takes 2 to 3 years that they understand it. That we have also the change in the boards. Now we have credit people in the boards, not technology people, not innovative people. So should be, but no, I don't see it.
Okay, great. Niels, what I would suggest is that we move to a different topic, and that is we've got 2 parties here that are more in the B2B finance
exactly.
sector. With Euronext and with ABN AMRO, I mean, they're completely different beasts and different type of banks. So maybe if you could bring the questions to these 2 gentlemen.
Well, let's actually start with Manuel with the stock exchange. You deal with primarily financial companies, and so what's changed in the last 3 months, given all the other changes we've heard about? How does that look like from your organization's perspective? How have you been reacting to that?
So thank you for the question. So what happened recently with the pandemic was that it generated a lot of uncertainty in the markets. And when you have uncertainty on the markets, you have more volatility. And volatility stands for us in terms of a stock exchange, meaning more transactions. And the volumes went up, as Martin already said. The volumes went up a lot during the first days of the pandemic, and that is translated with more transactions within our current systems. So we had to guarantee that we keep the operation itself and that we didn't take any major crash, guaranteeing the stability of the markets. And that was one key topic. But during this phase as well, what happened was the following, is that the uncertainty was on the markets, the volumes went up, but at the same time, we had to react and we had to send our employees home. So at the same time, we had much more volumes, and at the same time, we had to operate in a different manner. Because even if we have a flexibility within our colleagues, our employees on the Euronext, we had to guarantee that that they can operate the market through their rooms. And this was challenging, of course, because we need to adapt and react fast to adapt the processes and the procedures to guarantee that everything was smooth and with no problem. Actually, we achieved it, and the markets operated fine during those periods. What we learned as well is that we need to make some enhancements as well on the end user interfaces, meaning laptops, desktops that we will have, in order to guarantee that everybody can work smoothly remotely, even the guys that are more dedicated to operate the market. And that is something that it was fixed and guarantee to move on. And as well, another aspect that we need to focus during that time was the cybersecurity itself. Because, you know, the hackers tend to explore a lot the human factor, as you know it. And, you know, we all of us were with doubts about the COVID. What is going on? What is going on the market? Will it affect me? And when someone receives an email with that information or with more information, and click here to discover more about this, you know, the human factor or the humans with this uncertainty typically go there and click. And that was something that we focused a lot during this crisis, in order to invest and to create awareness and to put more filters and to guarantee more testing, to guarantee that the environment of the stock exchange was safe. So a lot of focus as well in this dimension.
Manuel, your sound is a little bit difficult to follow. I don't know if you maybe can try for the next question without the headset. So let's go to Eelko, Niels.
Yeah, I was gonna say, Eelko, you have decided, your organization has decided to tackle and address the needs of a very different group, the fintechs. Can you elaborate how you've approached that?
Yes, what we saw that we had some group of very good technology persons, and we saw a group of clients that were actually looking for a solution, meaning many of the new fintechs don't have the banking license. While they use a lot of client money, for example, if you use a company like Bugs, or I think it's also in Germany, some companies more like the new fintech companies, especially in the trading area, where you do trading for millennials, etc. So they take the client money, and that client money need to be safeguarded. And then we saw the opportunity and say, wait a minute, with us you can act like a bank without being a bank. And of course also for their proposition is very well, because for example the deposit guarantee scheme, etc. is in place. So we've been started working for them. And it's actually, we say the suits meets the sneakers. And actually that was sometimes is a cultural clash, and sometimes it's very interesting. I think the thing you see that the scale up with the fintech companies is much quicker than for us. You also see that the partnering game of them, they are in the game of partnering. And of course, as banks, you're often used, the partner you're using is IBM or TCS or a big partner, and they're completely different. I think what you see that the fintechs are much quicker be able to interface with a new partner, get rid of a partner. And for us, it of course takes much more time. To a certain extent, there is a reason for that. We are a bank, so we want to be really safe. On the other hand, when they want to go to market in 3 months, sometimes we have to say, okay, sorry guys, please slow down a minute. 3 months is maybe technically possible, but not all our compliance process, etc. Important, by the way, here is that also we start to rely there more and more on the process of the partners. And an important example is KYC, know your customers. I think all of us, from the regulators to all the banks, know this is a very big topic nowadays. But you see the fintechs are so good in this, because they cannot have that you can't do that in a day because you moved away. So you have to do it within minutes or seconds you want to be onboarded. And for us, it was really a good learning. On the other hand, it was also quite scary because you have to rely on a fintech company with their new way of onboarding clients. Wait a minute. So we have to trust them and how to do that. So we come immediately, yeah, we have to audit you, we have to do this, and whoa. We want to stay agile. So that's kind of that's a good challenge also for us. It really changed our way of thinking in this. Yes.
And what I hear from all of you, and I'm going to ask Sofia to elaborate, but what I hear from all of you is that the way to deal with the growing uncertainty around what your customers want, what the organization is capable of delivering, around what employees need in order to address the needs of customers. There's uncertainties on so many levels, and so you have to change the approach of how you get things done. And Sofia, I know at BBVA you've been working at changing that approach to be more customer focused, et cetera. Can you elaborate a little on that?
Yes, absolutely. I think in our transformation, beside this anticipation, there was a clarity in that this should be a 360 transformation. So it incorporated a lot of agile transformation, which is extremely important because otherwise, unless you change the culture, the way you work, it's impossible to address this transformation. I mean, today, 100% of the people that we are working in central service in headquarters are working in agile. We have people from really very different backgrounds, from, I mean, engineering, security people, mathematicians, but also comms or marketing people. And we also work with quarterly goals in a really committed way, so that we are able to really deliver in shorter periods of time, and also change if we see we have failed. But I think what that has given us also is the possibility to be much more closer to the customer. So we have this mentality of a minimum viable product. Everything we work, we incorporate the customer throughout the process. I mean, today, this year, last year, we had more than 2 million feedbacks from our customers in the digital channels. We use them in the very early moment of the process when we are starting to define, but also along the process. And even once we launch the MVP, because we need to continue improving, we incorporate them. For example, we launch something that we call Programa tu Cuenta, Program Your Account, which allows you to automate some of these financial well-being decisions so that you can have less stress, you keep the control, but you can have the bank doing things for you in a pre-programmed way, and you can always change that. Well, for that process, for example, we interviewed more than 1,900 people. We first tried to understand which were the problems with their domestic economy, which were the worries, the tension that unexpected expenses provoked to them. And then based on that, we created this MVP that we had different iterations, and afterwards we launched the MVP and we continue to improve this. And I think this is a really important way of working. And I would say, I will add just one more third driver that I think is also going to be really important, is the use of data and how we incorporate data in the way we build solutions, how we really leverage on data to provide a much better, much richer service to our customers. Simple but richer customer to our service, more personalized and more proactive.
And what I'm hearing is fundamentally you're building this capability to continuously learn, and that continuous learning through evidence, through the data, based on what different functions within BBVA, how the customer, everyone's figuring this out. And what's essential about these new ways of working is new ways of learning. And so really learning is such a fundamental aspect. So that's super interesting.
Let's talk about general strategy a little bit, and an important strategy that we see coming up in many organizations is to build very strong partnerships and to build ecosystems and to build platform companies. And so here, could you elaborate a little bit on that? But because I know that Belfius has done some great announcement lately, has already done some great work. So I mean, I think you're a pioneer to a certain extent in that. Could you tell us what Belfius is up to?
Yes, with pleasure, because we believe that the next 10 years it is about every industry that is digitalizing is value chain, onboarding, KYC, bringing everything digital first with human in support. That's minimum. But from a customer point of view, our vision is that, you still have to go to another app, to another industry. From a customer point of view, in a buying cycle, it's going to merge. People will not accept to do the other click and do another onboarding. And that's why we had a clear vision that the next 10 years is also about strategic partnerships. And we identified 3 teams, and I can even announce today a third one, because yesterday we signed a third one. So we signed 3 big partnerships. And partnership means we go into the capital. So we take a minority, 30%. So we did one with the second biggest real estate platform that we will vertically integrate into our app. What we bring to them is like 1.5 million reach every day, so that we will integrate into our app, give insights around credit, insurance, and then also we will provide banking and insurance company. Second, and that is a huge one, last week we announced a unique strategic partnership at equal level with Proximus, which is the leading telco in Belgium. It's 40 to 50% market share. That's unique. Why is it unique? Because we're 2 leading companies. It's not like Orange that buys Groupama Bank and then make the secondary bank into their telco. No. We are, with the fact that we're a digital leading bank, we have already 4 years in a row the best digital bank in Belgium. So we're going to offer that banking experience to Proximus. So banking services, the best, will be integrated into telco, that they can combine with telco rewards, with content. But vice versa, we will also integrate into the banking subscriptions telco packages from mobile, TV plus mobile, full packages. So that's the second partnership we announced. Again, unique, because on paper, any company can partner with other companies. I don't believe it. I mean, the CEOs should find themselves around the strategy and accept that they're going to partner. And thirdly, yesterday, I cannot announce the name yet, that is for next week, but we signed mobility as a service. We were integrating already in our app the several mobility services, but that's hard work. In fact, it's not integrated yet, because people want, like Google Maps, but also the combination of mobility. So our vision is, okay, we want mobility as a service, but we're not going to build that by ourselves, not like the real estate platform, not like the telco platform. So we participated in the most modern mobility as a service company. We will integrate that again. We gave a reach of 1.5 million customers, and then we're going to make them the standard into our app. And that's so we're very proud that during even this COVID crisis, we've signed these partnerships. So that, I think that is, I like to refer to what you're saying, Niels, that is making your company future-proof. There are still uncertainties in this partnership. Let's be honest. But we've signed them in because there are not enough partners for all banks. There's no second, there are no 5 or 6 telcos. There are no 5 or 6 dominant real estate platforms. I don't see 5 mobility as a service companies. So for those that you lock in, it's not only a defense, but it's also a very good offense, because there are not enough partners for everybody.
Okay, great. What I suggest that we do next is, Luc, if you could come in and bring in a couple of questions from the audience here.
Okay, that's great. So one of the questions coming up is that we've all witnessed the pandemic and the whole Corona crisis, and we've seen that cyber criminals have been very active and made use of this crisis as well. So what have you done to protect yourselves even better and to deal with this new threat or this increased threat?
Eelko, you want to take that?
Yes, because first I like to change the question, meaning we saw a different behavior in the cyber attacks. Especially beginning, we saw it going down, because especially I think the more state-oriented cyber attacks also went into lockdown. So you saw that also that it went down. Later on, we saw the less advanced threats coming up again. because of course a number of websites with Corona in there, the phishing mails was blowing up, but they were easy to catch. Of course, we put more people on the servers from the security operations center, so we had more people, eyes on the glass. And the second part, we did a lot of awareness, because I think within 3, 4, 5 weeks, you cannot immediately change your whole security posture. So you have to do it in different ways. So what we did, spend a lot of time in making people aware, watch out if you're working from home, if you're working on your own machine with VDI. So we changed some settings in our VDI, so it was more difficult to switch between your home system and your company system. But it was a lot about awareness. Yes.
Any other comments on this point, or can I move on to the next question? Martin, you want to say something?
Yeah, perhaps if I could comment, because I absolutely endorse the point about awareness, and we've seen increased creativity and variety in phishing emails. I'm sure we've all seen those. But I'm sure, like others, we've also been making a fair number of changes to expand remote working capacity, to introduce new tools on bring your own device. And the other thing we've done is being very careful to assess, as we make each change, what is the change to cybersecurity posture, and to make sure we understand the position we're in at all times. We did contemplate that, in order to offer the greater flexibility, it might be necessary to make some minor changes to our risk tolerance thresholds. In practice, we didn't need to do that, but there was the recognition there that we didn't need to move faster than usual, and that if that required a different setting of risk tolerance, that could be considered. Though, as I say, in practice, it wasn't necessary.
And so your own staff was working from home a lot, but also the staff of your third-party resources were working a lot from home in different geographies, in places around the world where who are not known necessarily for great network security and so on. Did you change something towards your outsourcing providers and their work from home policies?
We did indeed, and we put in place additional risk mitigations there, like I'm sure all of us, we have a lot of software development work done in India. And with the India lockdown, our big suppliers out there almost overnight had to get thousands of people working from home. And of course, in India, in some places there is excellent work. In other places there isn't. So there was both a productivity issue and a security issue, because normally our security policy would require that people working in India worked in suppliers' offices we have validated. So we've had to put in place additional risk mitigations to manage that additional risk. You're right there, we have had to revisit our policies in that respect.
I've got another question for Manuel in Portugal there. So in Euronext, the demand has changed. So demand has gone up. So I mean, also for ABN AMRO, all the clearing banks, so everybody, you're all happy. I mean, we're a happy crowd here. All the banks are doing well in this crisis, or most of them. So with these changes, what are the new projects and the new strategies that you are working on in Euronext?
Yeah. So yes, so the volumes went up during this crisis, but typically after a crisis, the volumes go down, because this is the typical trend that happened. And on the other hand, for sure, the companies and the market will need ways to finance themselves. And what we are looking now to move forward is to get as well to add to our products that we have as well as of today, to add more new products to understand what the companies will need, what they will need to finance and to recover from this state, because they are, some companies are with the real troubles, and we have to provide them ways to finance themselves. Another trend that we are following as well, and that it was before the crisis and we'll move forward, was to have green products, meaning that to have financial instruments based on green and environmentally friendly products, like the indexes, like green bonds. All these kind of things are trends that we are following to put on the market and to enrich our product portfolio to serve the customers. So the trend is mostly like that. On the internal demand as well, we learn from this as well, and we want to keep going the journey of digitalization that we started a while ago, but we want to go further to connect more our customers and to have an enhanced digital experience as well. So this is another thing that we will keep pushing and probably pushing more even after this crisis.
Okay, right, Niels?
Yeah, I get asked all the time, especially these days, around prioritization, right? So on the one hand, we all want to accelerate the digital, we want to become more innovative, yet we're all facing, especially in the private sector, significant cost control pressures. And often those cost control pressures translate into cost reduction rather than simply smarter allocation of funds. I'd love to get your thoughts from any of you about prioritization and based on your experience, what's a critical success factor for doing this well? Because we've known we need to do this well, and now it's especially important. I'll start with Anke first with that, but I'd love all of your thoughts on that.
I think the first problem is we should have a strategy. So if you know your business model, if you know which partners you have, you know which customers you have, what are their needs, and you have people around business and IT and sales and finance and risk, and they all talk together, then they will get an answer. What should be the first thing to solve? And they have the we have the money. So in my point of view, the first thing is they have to talk about the strategy. They often get the answer, what we did the last 10 years. I said, okay, well, that's not a strategy. Or the company credit financer says, I want to do that, and the retail financer says, I want to do the others, but it's also not a strategy. So I would put them all together 1 week and just have conflicts about the strategy. And then the prioritization should be very easy if you do the first step.
Anyone else want to comment on that?
Yeah, if I may, Niels.
Yeah. It starts with, yes, especially around the ecosystems. How do you go prioritizing that? But I'll let you answer the general question.
Yeah, it's a good one. The first one was we analyzed in beyond banking, where's the money? What is the Belgium, for example, we looked at the gross net income of Belgium, and we see where was the cash going. And the biggest ecosystem is real estate. It's 30% of everybody's spending. It's the first saving before you start really saving. So that's clear. That's why we went in real estate and we looked for partners. The number one, Imo was not for sale. So they would integrate banking and the cheapest banking, the cheapest insurance services. So we started with the second one, and then we signed that one. Telco, everybody sees Orange Bank coming. I think there's a lot of mistakes. I think they're having hard. We had calls with Orange Bank. They want to do the banking themselves. As bankers, we know that's hard. Onboarding, KYC, all the regulation, capital. See what's happening with Wirecard. Forget it. I mean, we will not do telco. But then telco, there you see from a buying jerky, joining buying circles. For example, my kids, when they buy a smartphone, it's then that they want a current account and they want the app. When you change your home, then you need a telco. When you change your home, you go for a bank, you go to a bank for credit insurance. So you see these buying cycles coming together. So that's the second perspective from a customer point of view. And that's how we do it. And then mobility as a service. I mean, you see that every mobility service will do his vertical digital stuff. But from a customer point of view, it's not enough. Start from the vision. And then we identify it, and then we make programs around. We want to be loved bank for investors, for enterprises. There's a big data transformation roadmap, a big beyond with these three topics: telco, housing, and mobility. That's how we do it. And then we try to have a market impact. That's the hard stuff every quarter to make it visible. Because now everybody's. I mean, we created expectations. And then it cannot take a year or 2 or 3 years before the customer can feel what's happening there.
That's great. And so what I'm hearing is prioritization. I mean, in order to allocate our investments smarter, part of it is the prioritization, but then also part of it is once we've identified some initiatives to pursue, coming up with approaches to those initiatives that enable us to stop the ones that we realize, oops, this was not a good idea, and then really instead move our resources to those that turn out to be really promising. Can some of you address that aspect about the kind of test and learn approach within initiatives?
I think that's most of all, it's a cultural change. Because I think we've been brought up with the idea, you start a project and you finish it. And if you have to stop it halfway, you did a lousy job, you should be fired. But that's not the case anymore. Actually, when we stop something after 2 or 3 months, we still have a lot of learnings out of that. And sometimes we do projects and we stop them and we got technology learning out of it, or we got a business learning out of it. And I think to have that mentality, I think that is the biggest change. And I think that comes also to what Anke said about the MVP. I think you mentioned that. The people have to learn also in their terms, because people learn still too often think in long projects, long deliverables. There you have to learn to start thinking MVPs, and failure is an option, as long as you fail fast, as they say, of course.
Absolutely.
I would add that.
I was just going to ask you, Martin, even within your organization, I'd love to get your thoughts on these two aspects.
So 2 thoughts I was going to share. The first is that I think prioritization can often best be done as a multi-level activity. So you may first of all decide how much resource you're going to allocate to your major projects portfolio, the projects for different sub-portfolios, different functions, to maintenance, to product enhancements. And within the kind of question about how do you then kind of innovate and where needed fail first, an approach we've adopted is to encourage more innovation based around using data. And to make that possible, we've established a data science workbench that makes it relatively easy to experiment with data and find what works and then adapt it so you've got something that does work. I think a difference between the approach we take now and what would have happened in the waterfall era is we don't commit at the outset of an investigation into how could we improve our understanding of a particular area. We don't commit to how far will it go. The things that prove really valuable, highly successful can then be, if you like, industrialized. They become part of the fabric of how we operate. That requires a much bigger investment than the experimentation. And we only make that industrialization investment where it's proven something's going to work. The world we're now in with ubiquitous availability of cloud services actually makes it much easier to experiment. The overheads are less. You can build the platforms and the framework that allow for innovation, and then encourage people to think big, but start small, and where something works, scale it up rapidly.
And the key then becomes the data, as you noted, and I know and I encourage people to listen to the interview that you participated in, because I know you guys are pioneering some ways of integrating data to make that available for others to experiment with and really develop much more informed new services from that. And this is going to become an essential resource going forward for that kind of experimentation.
Yes, absolutely. Make sure that, we have, for all panelists here, we have wonderful, I think they're wonderful. We made it together, wonderful interviews with all of you. And there's lots of good information in there. So go to CIONET.tv and make sure that you watch these videos. I have a very, very important announcement. And that is, I can now say who is the winner, not of the European CIO of the Year award yet, but who is the winner of the bottle of champagne from Geert. And the good news.
Can I do the check? Can I do the check on record?
Yeah, please. So tell us what are the 9 albums on your wall there?
So the Beatles, Sgt. Pepper's Lonely Hearts was found. The Clash, London Calling. U2, Achtung Baby. REM, Out of Time. Dire Straits, Brothers in Arms was found. Nirvana, Nevermind, of course. Daft Punk, Homework. Amy Winehouse, Back in Black. But there was one missing. But I'll give the bottle of champagne anyway. Because it's not Rolling Stones, it's only rock. No, it's from Deus. The Belgian band, the first album, worst case scenario. But the one who had, I think it's Marstijn.
Yeah, Marstijn.
I'll send you a big bowl of champagne. Congratulations.
Well, Martijn, you have won. So Martijn, he will join us later on in the panel. He's the CIO of Greenpeace. I'm sure this bottle will be very welcome there. So I would like to thank all of the participants of this panel. We're going to take a couple of minutes, 5 minutes break so that we can all move a little bit. And so we're going to be back in 5 minutes. We'll see one of you back later today as the winner of the European Digital Leader of the Year award. And for now, we are going to take 5 minute break and be right back with you in a moment.